The content on this channel is for informational and educational purposes only. Please contact a professional when it comes to your financial needs. Never too early to get a jump on tax season. 1099 DA is coming at you and it's coming at you fast. What are the changes you need to be aware of on this new tax form specifically for digital assets? Let's talk about it right here, right now on the Ujamaa network. The IRS is cranking up reporting from the crypto exchanges, particularly centralized exchanges. Decentralized exchanges will not be issuing these forms. So if you are trading on things like Uniswap, PancakeSwap, those kind of things, you're not going to get a 1099 DA. If you have a hardware wallet, and this is one of the things we're going to go over today, you are not going to have to issue yourself a 1099 DA. No reporting is going to be necessary. The 1099 DA comes from your centralized exchanges. We did a video a while back on the differences between centralized and decentralized exchanges. Centralized exchanges like Coinbase, Uphold, Kraken, um, Gemini, all the ones we talk about here on this channel, you are going to be issued an IRS 1099 digital asset form. And here's what it looks like right now. Now, on this document, you're going to have to make sure all your transactions, all your taxable transactions are in line, or else you're going to get audited. There is a specific warning ahead of time that this new tax rule will increase audits. So be ready for that. Make sure you're keeping your records together. Now, what's precipitating this is the IRS is focused on your individual transactions, your wallet by wallet transactions. So you're going to have to keep detailed records of all the purchases, particularly all of the transfers in and out of your wallet from different wallets, from other people's wallets, as far as payments are concerned, versus you purchasing them with fiat currency. Those are non-taxable events. So again, make sure you know the differences between what is a taxable event in cryptocurrency and what is not. Selling, trading pretty much are the ones you're going to really be looking out for. Anytime you're exchanging cryptocurrencies for payment, or you're converting your cryptocurrency into another form, going into another wallet, even if you own that wallet, these may be falling under more scrutiny in the coming years of reporting. Now, some things haven't changed, some things will change. One of the things that are not changing is the classification between short term and long term digital assets. The tax rate on short term digital assets is going to be your standard income tax rate versus long term, which is going to be taxed at a capital gains tax rate, which is more favorable. So you want to keep your cryptocurrency um, held for over a year, actually over 2 years, so you can get that more favorable tax rate. Now, there are some other forms of crypto income that are going to be taxed. We haven't talked about airdrops in a long time because I just haven't been involved in any, and there really has been a decline in new token releases. So, airdrops, mining, and staking rewards, those are taxed as income. That's not changing. Um, Things like your trading, that's going to be a taxable event. Sending crypto from one custodial wallet that you own to another custodial wallet that you own is not going to generate a taxable event, nor is purchasing with fiat currency on any exchange. But it brings us to, why are you holding your crypto on exchange anyway? One of the things that are not going to require a 1099 DA is if you hold your cryptocurrency on one of the many hardware wallets. We're going to go ahead and post a link here for our affiliate partner, um, Tangem, and maybe we'll give you another one for another affiliate partner here. But we want you to go ahead and check out Tangem, because really it's one of the easiest ways to purchase the cryptocurrency on the app. You'll have it on your phone, and the cards are keyless. They don't have any seed phrases. And it's one of the things that makes it very easy to use versus a decentralized network, which are also not going to be issued any 1099 DAs because, again, decentralized, you don't own it. Or at least no one knows who owns it. It's just your wallet. No one can identify you to a key. That is a big deal. That's a big distinction between centralized exchanges and decentralized exchanges. There's no reporting to the IRS on the decentralized exchange. Exchanges like Coinbase, Gemini, Kraken, those have to report. And that is going to be one of the things that cryptocurrency enthusiasts have talked about long term. I've always been one that geared towards centralized exchanges for better adaptation. However, these were the things that those early enthusiasts were talking about. Less reporting was something that was looked at favorably, so you didn't have so much regulation on how and when you made your money. But I think for most people, it just meant they didn't want to pay taxes on that income, which I guess I understand. But again, one of the reasons why we don't have universal adaptation of cryptocurrency because of the nefarious actors that typically come up not only on central exchanges but decentralized exchanges as well. At least with the centralized exchange, you're going to have some reporting and be able to track the movements of certain assets. And that was the push behind it, or at least the talking points behind greater enforcement and greater reporting opportunities for the IRS. Having one less form during tax time, such as the 1099 DA, is going to be pretty critical. Now, you will still have to maintain your records, obviously, but one less form will help your filing go a long way. And you can do that by placing and putting and purchasing all of your cryptocurrency on a hardware wallet. We're going to go ahead and link the affiliates that we have here. That's Tangem and Ledger that we have available to us. I haven't received the affiliate link for Trezor yet, but check out those two sites, and they're going to be in the description of this very podcast or this very recording. Check it out, support the channel, and I will talk to you very, very soon.